Hello and welcome to this quick review of the entire system. If you have seen the 2-3 days cycle, we call it a major cycle for intraday traders. If you're looking for even bigger cycles right here, they are like multi-month, multi-week cycles. So everything happens in a top-down approach. Mostly people want to make $1,000 a day, $2,000 a day, and treat this as a job, which is fine if you have that skill. If you don't have it, this is where we are trying to educate you. Now, this is not a trading advice, obviously. Now, today's agenda is once we have picked up the major next 2-3 day cycles, what do we do? How do we enter? How do we put a stop loss? So this is a chart of wheat, and we can do it on ES or BTC, wheat, crude, doesn't matter, anything, because the logic here is that we are using real-time supply demand to generate these level for next day. For example, ES, this level is generated at the close. So what we do is we look at this data here and we generate the potential blue lines here for next day. And this is what we are printing above this and below this. So now the reason we waited this long to describe what to do with these is for people who have stuck around and they have been watching this, and if they see there is value in this for them, now now we can actually I would say suggest what they can do with these lines. Let's put it that way, right? Because and that is what we need to do. Once you work for a big financial institutions, they make you go through the same process, right? So you have to stick with one system. You have to follow it. There are senior traders who have very large positions already in play in various trading options or stocks. You're following emerging markets. You are a specialist in one area. You don't do 20 things, right? So you pick up your market and specialize in this one thing. It could be anything. And ES market is the most manipulated market in the sense that let's say I want to buy the stock lower and I will put some pressure in the entire market. And I am going to put $5 billion to move the market down temporarily, right? $10 billion, right? And I want to buy $1 billion worth of stock. This is all hypothetical, but this is how it goes. If you have 5,000 traders sitting in this big, huge halls, on the loudspeaker it says, anybody who is long in Bank of America or stock X or stock Y, get out. We are running this program, right? So if I am a trader specialist, or if I have positions in Bank of America stock, and they're going to run the sell programs to put it down and I'm long, I will get out slowly, right? Quickly. So this is all planned. Nothing happens randomly. So they're driving things to value. You have heard market profile. If not, read up on that. So this is what we are doing. We're looking at this contract behavior and printing these lines. So the story is what they will do is they will buy the puts. They will run the future market and sell huge number of futures, thousands and thousands and thousands of futures, put the pressure in the market temporarily, bring the price down, do their business. So what happens is when they're putting pressure in the future, they're losing money in the future, but they're making money on the options. And then they exit when they're done with their business, and then they reverse it. How they reverse it? They take the profit on this, and then they buy the calls, and then they run the futures on the other side, right? So that's why you see the spiky things, and this is very prominent in S&P. So how they do it in SPY, SPX, is don't have to worry about all the logistic details. We can't control those things, right? As a retail trader. So the lot goes on inside. If you're not an insider, it's hard for you to track it. So out of 100 models and inventions we have, the easiest thing to do is what we have been posting for 5-6 months, right? So for people to see first, see if your mind is showing interest first, right? It is not like, it works or don't, it doesn't work. It's nothing to do with that. It is about having a structure, watching the structure for a given instrument, and then following it. WD Gann was trading wheat. It is the easiest swing trading system you can ever invent. There's also risk if you do futures of the limits and all these things, right? Bad news comes, this and that. But you have options on these. You can do vertical spreads. And that's what I do personally, do vertical spread on these, and it's very successful. But the model you can see is same. So the question is, what is this model? How does it work and how to trade it? So let's go through, maybe let's take wheat, right? There are three things happening here. Let me suppress those. So let's talk about this model, how it works. Since you've been watching this for a while, the levels are printed for you every night. The market closes here, we know these levels, and then we'll plot it. And then then we say, if somebody is interested based on their own discretion, not advice, you can go long and short around these levels. Now you have to qualify this a little bit better. So if you are interested and been following it, so what first thing you should do is plot these levels for day to day, not entire long this day to day, right? Because these are reference point for the future as well, which I will show you. All right, so that is what it is. The other lines on the top and the bottom, they are also forecasted, which you don't know what they are used for. See these green levels? These are basically reversal levels, but they all, again, how do we know these levels for tomorrow? Because we manipulated something here. We have this, now this is called do not trade zone. This is the contract collection zone, these blue lines. That's why we say below this, above this, go long only and short only. So this is your risk zone, but this is where they will drive the contract accumulation. Either it will be accumulating here for a while and it will take off, or it will get rejected and there's no other contract to be collected there. That's all there is. So keep it simple. It's not a pattern engine of 10 different logics. This is a simpler one, right? If you ask me where will they go precisely, hit and reverse from there, there are different models to do that, which we will demonstrate later. One thing at a time. So here is, let's go to wheat. Okay. So what happens, these lines are printed. Let's start with this line. This day is over, this line is printed right here, right? So I say go long here and go short here. Either one of them will take place. So your stop loss will be here. You may have to take 1 or 2 stop losses before you take on. Ultimate goal is 1 to 3, 1 to 4, 1 to 5. So this is your range of your stop loss as well, because if you're going long and you're going short, purely, we're not taking any additional help from anywhere on the direction yet, right? So we just look at this pure price. Okay, and this is not to trade. I'm saying go long here, go long here. Stop loss is here, right? Market is printed. Now luckily this worked out very nicely. Did not have a stop loss, unless inside the bar you got stopped out one time, right? So you lost 2 points to make 10 points, right? 1 to 5, 1 to 5. It happened one time. It happened second time. and the game is over. You should be out of the system. If you want to become a professional day trader, you have to make 520 to $100,000 a day as you progress in the system. Now the computers are doing all the work, but that's how it used to be, right? So anyway, end of the week you have to win. End of the month you have to win. Otherwise you're out. Out means out. This is a very strict business, right? It's not easy. Everybody want to sit on Wall Street and make millions, as movie shows that, but it's very difficult business because of emotions. So you must do a lot of meditation. We will release some meditation music as well shortly for free. So but you got this idea, right? So that's what it is. So when we say go long and short, that's what it means. This is your stop loss, then you're going long right here, right? 1 to 5. This is 1 point. Assume this block is 1. 3 to 5 of this block is your target. Why did it stop here? We'll discuss that. There's a market maker levels, banking levels, market maker levels, which is stopping the market. And but anyways, you got this idea first, right? Okay, so now this day is over. We printed this is where you want to trade. Above this, below this. So if you are going short, so your duty, if you have been putting these lines and tracking these lines and keeping these lines on your chart, there's a reason for that, right? If people are serious only, they will get any value out of it. They're not serious, they'll go back to their own systems. Now, this is how professionals are. Professional, now, being a algorithmic inventor of 100 models and knowing the internals by being on the institution side, I know a lot of models, right? But they are not exactly 100% models which big companies do. There are some, that's not the way it is, right? So you'll be surprised how it works, right? Internally. So much code, you cannot really understand what's really going on. But this model is based on supply demand, based on the contract operations and projections based on that, right? Market maker levels are involved in this, projections are involved in this. So I think I gave you the entire story around it. Okay, so this was successfully traded day if somebody was trading wheat. Now this day, sorry, this day we plotted this as well above this. So if you're taking a short, based now why you're taking short or long is a different story, right? That we will add trend to this. Not look at anything else. Not look at anything else right now, right? So maybe I should just let's just remove it, I guess. Okay, better, right? So same thing. This is your stop loss. 1 to 3 to 5 of this is a profit loss. You should not lose money every day. You should make money every day, or you should be flat a day. That's the whole idea. And progressively, week by week, you'll be making net profit trading. So if you can control this, your mind, and you can control your risk, and you are able to have a system which is going to give you 1 to 3, 1 to 5 on a daily basis. Now it came back here, right? So let's say you took this trade and you wanted to take it one more time. Now this is a loss right here, right? So if you look at this, 1 to 5 was done. You took it again, you lost it. Well, lost it, right? So that's why we say, so now what do? You have to reverse it. So now the day is over. So you took a loss, lost 2 times, and you won 1 to 5. Your net should be winner. Instead of doing 1 to 5 win, you are 1 to 3 winner, right? You should be winning. All right. So next day, this was small day. Let's pick it this way. So this day, what happened? Now, this is what I was saying, that you need to track these levels from the previous day and plot on day by day. That's why it is plotted here. I'm just giving you these levels. It went here, and it came down to the previous day's market maker contract collection area. And it's not going to hit precisely same thing, but If they're moving here, they're jumping from levels to levels, right? So that's a different strategy. So anyway, so this day comes, we plot this level, we say go long and short. So there we go. This one was, if your stop loss is here, 1 to 5 easily came, right? All right, so you got the idea. Same thing here. We said go long and short. Here, short came, boom, twice, no risk to the system. Here, long came one time, second time you lost it, and let's say you want to just go long only, right? Just pick one direction for initially. Don't reverse it. You will get totally lost and confused. Now, this is where I'm saying, which we can filter out which direction you want to make, to go, and what to do. So there we go. This is plotted. Go long here. Just want, let's say you want to just go long. So you took long here. Second time you tried again, you lost it. Third time you tried again, and you won it. This was plotted. Market was here. It will go to this level. It will contract. Will be collected here. You took a short here one time. Second time you won, and on it goes. So now let's take the second part of the equation. Now I'm gonna give it to you. I'm giving everything free to you for a reason. Now comes the trend part, right? So you come with your trending system. What this is, VWAP on the bottom. This is the VWAP, multi-day VWAP. It is all over the internet. You can get it, program it, get it programmed. This is a good way to find the trend direction. Because it goes, these commodities trade nicely for a few days up, few days down, few days up and down cycles, right? So when this trend, you can see I'm adding a few moving averages on top of multi-day VWAP. So do your homework. Nothing is going to be given to you for free by anybody. Anybody who's selling you something, they have agendas. And when you're not making money, you don't want to spend your money when you're learning, right? Learn the right things because this is multi-generation profits. All right. So the idea is when see these two lines, these are the two moving averages. 200 moving average and 100 moving average sitting on top of multi-day VWAP. That's the one of the strategies. If you have a better system, if you not have a better system, you can use the cyclic system I told you, multi-time frame. I showed you in the first video. Watch that out, right? You have to build things. Keep buying and keep spending money, keep buying, keep buying, keep buying other people's ideas. Your brain is not going to structure it correctly because you have your own frequency. Like market frequency, you have a human frequency. So I'm going to release some audios where I'm converting this frequencies into audio frequencies for a given stock or a given commodity or given futures. So what is going to happen if you want to trade wheat? Your brain, your neurotic junctions, your neurons need to start adjusting to this vibration. So it will become a natural second nature to you. That's the whole idea. So there's a brain, in the brain, 6 billion neurons. When they become full or they become a long-term sustainable scenarios, what brain does, it moves all this information to long-term storage into your gut. Your gut has 400 million neurons. 6 billion in the brain, 400 million neurons in your gut. That's why they talk about gut feeling. And then there are 40,000 neurons in your heart. There are 3 brains. So when we start listening to the right frequency of vibration of the instrument, your brain over time will start putting this into your gut and into your heart. So you will have 3 things, so you will not be confused when you're trading. It takes 90 days to listen every day. More you meditate, easier trading get. That's all there is. That's the magic. That's why people who are uneducated don't have a lot of opinions. They follow those rules and they're successful. But they are tuned into these frequencies. Otherwise, you're corrupted, right, in so many ways. Anyways, that's so you have, if you are starting off your life to be a profitable trader for multi-generation event, right? So what you have to do is I just explained to you. Start meditating more, 1 hour a day, 2 hour a day. Nothing to do with any religion. Frequencies, right? This is a frequency. Why are we able to predict the entire year frequencies? Because we have the frequencies for SPX. We predicted in the next video, I will show you the entire year, last year. It doesn't matter. Chaos for people, frequency for aware people. That's all there is. So it's not about system. It's not about anything else. It's about you and your consciousness and your spirituality. Higher it goes, easier. Money is not an object. It comes, but you start with the right system, right? So when you're trading these lines, you should have your trending generation logic which you trust. If you don't have it, use VWAP, multi-day VWAP, and then this is current VWAP, the fat one. This is yesterday's VWAP, and I am doing average on the VWAP. That's all there is. And the idea is pretty simple. When the trend changes, it will last for a few days. The trend changes, it will last for a few days. So it's giving me an idea what direction should I be trading. So now this is a method to control your emotions. I can tell you why it stopped here, or why it stopped here, why it stopped here precisely, right? Because I have this logic. You don't. If you do, perfect. But in context of what we have been plotting, blue lines, this is what it is designed to do. Now we're adding a trend system. Now this trend is obviously down, right? So what do? You can bias down trades only. When you're starting off, trade a specific direction. So take a short here. This is a loss. This is a profit. This is a profit. This is a profit, right? You ignored one side when you just go on the second side. And you know after 4 5 days, 6 days, it's gonna flip, right? So right now it has not flipped completely yet. So this is where it flipped, right? So this is where it flipped now based on this system, right? Then it flipped again. So short here. So this was all, if you took a short, you have all the wins. Now can we do better shorts? When I'm printing those levels for you, I'm giving you all the lines on the top and bottom as well. See that? So one thing at a time, right? So one thing at a time. So there we go. So now we have the trend, we have the levels to trade, and if you can have a better trend, maybe you have better tools to find trends. You have been working on it, you're trying to become a successful, or you're already successful, doesn't matter. So if you're not successful, you have to find a way. I just told you one way. Now comes the second part. Sorry, the third part. First part is levels, second is the trend to get you started. So you will notice few things here. Reversion to the mean. So when everything is stretched out, you can also do what we call as a measurement boxes. See how far it goes from the average, right? How far does it go from this average? When it goes to the extreme, this potentially it will turn on the other direction, right? So tactical. So you can draw a box in the downside, right? Based on what is happening recently, or what has happened ever long term. How far has VWAP moved from the average, right? In last 3 months, 6 months, downside and the top side. That is also going to give you some volatility, ideas like this. So you have a down box and you have a up box. So here you got the up box, it came down, and then here you have another box. So you get stretched out to a certain size and then it goes down. So here, recently, now let's say the same box is going to reflect on the other side as well. Run it on, pin it on the average. Right here is a reversal, right? Now you have a box from here too, which was half this size. So I'm not going to draw it again, but you got the idea, right? There we go. So you're getting some evidence or I can just draw it here, that hey, this was the biggest stretch on this side, it'll reflect on this side as well. So this gives you some ideas of reversal, right? If you don't have anything else, MACDs and all these things will not work for you. Okay, there we go. And my interest is okay. So this up box reacted nicely. Now keep on traveling with up box. There we go. Reversals are coming potentially, right? So you got it. V doesn't move that much, but it's good. Somebody who wants to practice, this is good approach, right? So there we go, right? All right. So that's one thing you can look at. Now, this oscillator is a custom oscillator. It has 10 non-correlated instruments into one, 10 in one. And this is going to give you 300% more profits than anything else out in the market for a reason. It does a lot of things internally. You can build your own. If you trust something, that's fine, right? It's not about, there's nothing to be sold here for you at this point. So better for you to just, I'm just giving you the ideas, right? So you have the levels. All there is in the market is levels, trend, and pullbacks. So now if this is the trending situation, you have this derivation, right? Now the trend is down. I showed you exactly if that is the way you want to trade, boom, 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 right? From these levels. But these levels will be printing, they are printing for 7 years, non-stop. They've been profitable for 7 years. They're never going to change because it is using the market generated information of contracts for the next year. Sorry, next day. You can do it on a weekly, you can do it on daily, but you got the idea. All right, so we have the levels, we have the trend. The third part is simply pullbacks. This is where the other lines come into picture. When you are away from this too far, and we have printed lines on the top and bottom, how do we know that this is the end of it? It could have gone here or here to reverse, right? This is for reversal trading. And this is where this comes into picture. Trend is down, confirmed. This is a pullback into the trend at one of the levels. This is gonna be a spot for you to take the short side. So you went long. You should not be going long because there was no long trade if they're following the system. So what happens then? You took a short here, probably, and took a loss. And then you're waiting for this triggered, never got triggered, right? Now this is where, once you progress through the basics, trust on these lines, you go to the next level. This next level is reversal on the extensions away from these blue lines. Trend is down, pullback is here, stop loss is just right there. Or what I do is look at the top line. If it is too big of a stop loss, you can do vertical spreads, or you can do is look into the previous one. I want to minimize so the red line is there, the level is there, this level is there, right? So, but you don't have the system completely. So what I would say is you can take this box, this height, which I am giving you, and put it on the top. So like this. So this level is all you need to do anything. What happened? There we go. So there we go. So I will rotate this box to this line right there, and I'll make this as a stop loss box. Trend is down. It has stretched away from the line. I'm trying to look for a reversal towards the trend. This area has been established. It is on my line. What you can do if you don't have these lines, you can take this levels I'm giving you, and you can add Fibonacci extensions, ABC, right? You can do something like that to build your levels. Trend is down, pull back, extension, stop loss box has been there. Put the stop loss right there and go short. Why? Trend is down. Let's try it again one more time. So right here, trend is still down. The two lines are separated still. See this line, white below red. This is 100. You can put 100 or 200, 150 or 200 based on, it needs a lot of effort for a single person to twist their mind into success. It's not a global thing. You sell something for 10,000 people and no clue what's going on. First of all, you should ask them, have they traded professionally or not, right? That's a good starting point. But anyway, so you have this level. This is same like this, right? So that's fine. They'll each arm market will have a kind of similar collection, right? So let's, for the logic reason, this is there, this is there. It could be even smaller. It's almost same. That's fine. So I'll move it. I'll move it. When will I start moving this? I know trend is down. I know this area is critical. Now this area is where is potentially going to reverse, because my oscillator tells me it's going to be a potential reversal towards the direction of the trend. I get my box, go to your levels, and put it. Levels are already printed for you. Put it here. I said okay, and I know my green levels are very powerful. Green, green, right? Green reversals, green reversals, green reversal, green reversals. Well, we don't want to be a dummy trader, right? Just because it's 70% of the time it will just go to green and reverse, right? I know those statistics because I am the inventor of all this, right? So here it is, right? So I'm already expecting, hey, I'm gonna let it stretch. It's also principle of reflection, right? So it went down here, and then it's exploring the contract. It's exploring the contract. Trend is down, pullback is here. It went away from the blue line. I'm looking for a reversal. It could be on this line area, it could be this line, the green level. You should know your levels, right? Whatever you're tracing. So there we go. So okay, if it gets into this, I'm gonna take a shot. This is my reversal, right? So somewhere here, stop loss. And there we go. So you got excellent. This is not printed here. I'm pretty sure it was here on the top. So you got excellent one huge trades. So starting the trade, initiating the trade in the direction of the trend, reversing in the direction of the trend by oscillator. You have all the rules, 3 rules, that's it. So it all drives from this level, bend into these levels. So you have these levels. If there's any interest using them, keep using. I'll be keep posting them. If you need one-on-one sessions to see where you are trading, if I can help you, let me know. We need to have sessions, right? I need to see what you're doing first, where your mind is vibrating. Then only I can give you some advice to coach you or some how to fix you or things like that, right? It's a lot of effort. It will take few months. One-on-one coaching, few months, not a seminar and all. These are gimmicks. These people don't know what they're doing, actually, unfortunately. But anyways, all right. So now we know. Now I'm gonna go very hard in next 2 minutes and go for it. So here, trend has now shifted. So I want to do a pullback. So you may decide, hey, I'm a reversal trader. I'm not an initiator trader. That's fine. But you have the levels. Logic is same. You need to find your oscillator. I want to reverse it in the direction of the trend. Okay, perfect. So where is the trend ending? Trend is up. Pullback is here. Lines are here. Stop loss is boom somewhere here, right? There we go. Pullback. Second pullback comes here. Boom, right? All right. So you got the initiation. You already had the initiation trade. Long here, long here. Did not do much. This could be a stop, like a loss day. Again, you're taking longs only. So when you know this is going long, you took a long here. Boom. This one worked out, reversal, but this one did not work out. Did not go all the way. Since you're trading only one contract, this one stop loss. If you had it in the trade here, this one gave you 1 to 5. So net profit, right? Okay. Next day, the trade reversed. So I'm just gonna go now. You got the idea. Everything I've been spoken. Let's not waste time anymore. So trend is up. Let's talk about pullbacks right here. Boom, long, boom, long. Trend is down. I want this guy to go on the top. It went top here. This day was nothing. This did not do much. There we go. It comes again. reversal, stop loss. So end of the week, you will be net winner. End of the day, you should be having a very small loss, if any. Next again, stop loss, trend is down. Look at these two white line, blue line scenarios. Now this has a lot of rules, so I'm just showing you some sentiment, how you can use these levels. So this is pullback, short, got a good short, right? So, all right. So you learned about pullbacks, three different patterns of trade. Now this trend is down, so going back to the original system, short below this is a loss, short below this is a big win. This one didn't happen. We still want to take a shorts only. Shorts only, boom. Short only, loss. Now, one thing what you can do is if the market is sitting on these levels, have not moved as expected, and this level is telling me do not go short. So you can, again, you have to you need to trust your system, right? Reversals and oscillators. But if you're just going short and long, so if you took a short here, did not work out, but you know this guy is already sitting there. So short is, even though trend is short, this is a 200 and 150 moving averages, doesn't gonna turn. This is for bigger trends. Reversal is best way I use it for reversals. So trend is down, reversals are gonna just do well for me. Reversals are going to do well for me once it is getting to my green levels, close to my green levels, right? So you should know your levels, green levels, right? So right here, see that trend is down, reversals are working reversals are working very nicely on the green levels or closer to green levels. So this, if you are doing just starting with this, only one sided trade, short here, profit. This is short here. This could be, just a flat day or very small loss. Boom. Here, same problem, right? So short here or long here. So if you took a short here and you lost it, market is sitting here, that means you can try long here as well, depending on your system. But for me, I will not try it, because I am mostly personally a reversal trader at the higher edges. And when the market is do this way, I look at myself, okay, trend is down. This is not go pulling it down. It's been extended for a few days. I will reverse my trade, right? So, but anyway, so short here. Let's go back to the short here, right? Short here, short here, short here, short here, and then short and long, right? Short here worked out. So you can see every 5 days you will have one loss. Net winner. This is where you start slowly. All right. So trend is still down. All this is trend down for a long time, right? So when they're trying to, this is the fooling principle. They fool you. Short here, green level short here, right? So reversal shorts, not the trend shorts. Trend shorts are here. So if you are here, pick it up, perfect. If you have a system to do it, this is telling you to go long anyways. But again, if you're following the trend, so if you don't want to follow the trend, you can do this simply at this level. So you got the idea actually. I don't need to go back over and over, right? All the things you got the idea what to do. That's all it is. So let's say you don't have VWAP, you don't have all these things going on. So you just bring your oscillator. I think there are thousands of oscillators out there. Take one which you are trusting. So you can say, okay, you know what? I'm going to use my oscillator and I'm going to use this level. So what do I do? So at this level, oscillator says go short here, right? So if it says go short here, I'll wait for this guy and I'll short here nicely. This says go long here, so I'll wait for not to go short but to go long here, right? If it says now there, as I said, there are rules, right? 70 or higher is a short. So here it comes to 70. Levels are printed, go short here. Okay, it worked out. Here also it says go short here, go short here. At the level, short here. This is more of a scalping strategy. Now it says it should be like 30 or below. This is 28. Levels are printed, go long here, you take a long. Then it goes here, take a short here, right? It says go short here, so ignore the longs, let it go up, let it come down, short here. This is again a short here, so stop loss is here, right? When this one happens, these are 10 things telling us what's going to happen. So this is how you can. So if, as I said again, if you're using this kind of some trend, pull back away from these lines to revert it back is a better approach. If you don't want to trade that way, reverse trader, you want to drive this from these levels, use this approach I'm telling you. Bring your oscillators, mark your levels every day, and keep them marked. Because sometimes it goes there. Why did it stop here, right? Besides that, but look at this on the left side. If you're marking these levels every day, it will go to one of these boxes for reversal. So you have to track them every day. So let's quickly finish this. It's already 40 minutes. So here, below this line, right? That's why printing this below this. Okay, this where we go. Boom, short. Okay, here, wait for ignore the longs, short here. Here, ignore the longs, short here. Here, ignore the longs, short here, right? Now this is going to improve your accuracy to the next level. But everything driven from a known level, not to be confused. Short here, below this. Here, below this. Here, long, above this. Here, short below. Never happened, no problems. Now, one of the rules is this green line is. Let's not get into those rules because you don't have this, right? So, okay, there we go. This says short here. So short here means it never came below this. So day is over. Got a new levels. Now this says short here. Perfectly went here. Levels are printed. Short comes here. Boom. See that? Your losses are almost pretty much eliminated. Losses are pretty much eliminated, right? Now these are the rules which tells me when you see our oscillators like stochastic and everything else, they're going 100 and they're sticking on 100. That means the pressure is very strong on. This is where the multi-time frame comes into picture. Pressure is very strong on the downside. So this is where you try to overbought, oversold doesn't work. That's the reason it doesn't work. This oscillator takes care of that. This oscillator very clearly describes that behavior. So anyway, so when you're in the middle of it, there's no decision. It's going sideways. You don't know it's going to go up and down, right? So what do we know? What to do? I might peek into this trending thing and say, give me some direction. Well, short direction is better because the trend is still short, right? Okay, so when it goes to this, so there's no trend actually given us here, but I will take a bias on the short side, right? So simple. This is a dashboard. You build your dashboard. Levels, you cannot challenge them. For the rest of your life, they will be printing and printing and printing automatically like this. Now this is around 70 plus, so you want to go short here. Boom, trend is still down. You can see, you can peek into this, right, if you like to. Here, where are we? So short, this is a loss. So after this last 10 trades, first loss is coming here, right? Boom, I don't know. So short here did not work out, right? Trend is still down. So what I'm doing, now I'm looking for reversal then, right? If I lost this, okay, let it go up, cool down. So here I take my box, put on the top where it is starting to do this, I take a shot. Here, long above, here it turn around, short here, here, short, right here. Look at this, 80 plus. So ignore the longs, short, boom. When you take this oscillator driven bias and also the trend bias, right? Now we're adding some juice. You can see the stops, losses have almost gone. Here long, Boom. Here, looking for a short. Okay, short, short, short. Boom, short, right? See how it totally makes a perfect sense, right? So I took a long time to describe this, what the blue lines have been posted for. I gave you some ideas on the trend reversal and trading. I gave you idea on initiation, and I gave you idea of initiation driven by some of the best oscillators in the world. If you have those, or if you not have it, find some. If you want some, I think we have to talk about it differently. But if I get engaged with you, 90 days one-on-one has to happen. So I can, you have to show me every week your output on a given instrument, right? So, but I'm just dealing with this four instrument for you. It's a lot of work for me, right? I'm just giving it to you just to get you to the point to make you understand. Do not fall for scams. There's no need for that. And I also suggested that you keep these tracks of these blue lines. So why? Because it comes here into these boxes. So I can say, okay, this box is was there. It is sideways action is going on. It's going to go long, and then it's also a reversal, right? So now the reversal rules are for the trend in the direction of the trend. So trend is not yet changed. So there's no reversal here, but you can see market goes to certain levels, right? So just keep these tracks. You will have to become a trader. Now, since we have spent 5 months, if you're tracking these levels, now I'm giving you the secrets, how to get effective, right? So I'm looking for a short here, boom, short. Here I'm looking for a long, there's no level to go long, right? But we have this level to go long, right? This is too far away, it may not have any trade. So you can use this level to drive it from. So you can pull this out. So if you have this tracker, you just have to do it, right? So go long. You tried long one time, you lost it. Second time, took a big one, right? So that's how it is. Okay, so now we're looking for short in this area, way on the top. What is happening here? We have this level sitting there, right here, and we have this level sitting there, right? And you have to trade. You're forced to trade every day. If you don't trade every day in the professional world, they don't know what they will think. You're not doing anything useful, not making money. Get out. Algos will take over. You don't need you, right? What's your edge? This is your edge. This is the reason you should plot these levels. All right, so market goes here. This is saying, now this again goes down to the idea of the, let's see what trend has happened. Is it shifted to the long or not? Now the trend has shifted to the long side, even though for a few days, right? So when the fresh, after 7, 8 days, 10 days, trend is shifting, this is one idea, right? So let's say we are not using the trend, as I said. I always look at the three things. Where's my trend? I make my decision. Okay, trend is shifted. I want to go long or short. I can do both. So I have these levels. That's why I have these levels printed. And I look at this. Where am I? Where's my context? Okay, I want to go short. Okay, this is my box. This is my stop loss range. Let it go to my green level. It is at the green level. You can have your Fibonacci levels. You can have any levels of interest. If you're starting from day one, today, you don't understand what I'm saying anyways. So you have to build your portfolio of understanding, basic understanding, right? Where are my levels? Where is my trend? Where is my pullback? Three things. Answer this for yourself. There we go. Anyway, so I took a shot here because of this. And there's no current level is not there, but the previous level is there. Previous 2, 3 levels are there. This is pretty strong, right? This is what it is defined for. So we took a shot here, right? This day, again, trend is up. Let's not you look at the trend because we're not going to use that for reversal. This is initiation trade. I'm going to go short here. Again, I'm going to go short here, right? 70 plus is short. So I'm going to take a short here. Boom, short. Boom, short, right? One loss, 2 to 1 profit. This may be a flat day. Doesn't matter. But you're following the rules. You're following the rules. Short here. Boom. Long here. There's nothing to go long on. But there is this level, right? To go long on. All right, my friends, you got the idea. Short here, long here. That means ignore the short, long only. So there we go. Boom, one long and then came back, one long, right? So there we go. So this is it for now. How to use these levels. So currently, where are we? We are on the this level. So this one told us to go short. This one told us to go short here, right? 72, this is 77 level. So recently, this is a short. All right, this is also a short. Where are any levels there? Look back on the left side. There are a bunch of levels right clustered together right here. Okay, so I know this is where they are jumping from levels to levels. This is where they're jumping from levels to level. Short here. This is reversal short because this is way too far away. When this is too far away from the price, look back to your previously generated levels. Look at the oscillator, right? Short. Now this guy, let's see how it opens on Monday. This could be a long. If it comes long, you'll go long here, right? If it stays like this. If market opens with a jump, it may go to the green level. This will go down again, very big time. The trend is now short, right? So you have to structure your mind based on where is my larger term trend? Am I a reversal trader? Am I an initiated trader? And what tools do I have? And I just showed you one portfolio of tools, how you can use it effectively. So here we are going long. It never came to that line. Okay. How about here? We are going short. So short is coming, short is coming. You initiated a short here, and short came here nicely. Now the long is coming. There's no long here. This is again less than 30. So this long came here. So let it come down into the box and drive out above from this long. There we go. Then the short came. The short came. You go to the short here, right? Perfect. So you have to work on your stop losses, the trend direction, and your pullbacks one at a time. And if you want to trade larger term trends and up and down, options can be used, vertical spreads can be used. All right. Thank you very much for listening. I appreciate it. I hope you practice, come with ideas. Maybe there are some useful ideas here for you. Thank you very much.